Feeling overwhelmed about real estate jargon? Don't worry, you're not alone. Let's break down the must-know terms that every homebuyer needs to know to make an informed decision. Hey everyone, I'm Shane Sear with EXP Realty. Whether you're buying your first home or your next home, understanding real estate terms is critical. Navigating the real estate market can be like learning a new language. Terms like amortization, conditional offer, property transfer tax can be confusing and intimidating. According to a recent survey, 70% of home buyers admitted to not fully understanding terms when it came to purchasing real estate. This lack of understanding can lead to costly mistakes and missed opportunities. So, what are the key terms that you need to know? First, we have pre-approval. We're going to go through a series of qualifying questions based on your financial information. This includes your income, your employment, how long you've worked for that employer, and many other aspects, any assets or any savings that you have. Getting a pre-approval is extremely important whether you're buying your first home or looking to upgrade to ensure that you're shopping within your means. The last thing you want to be doing is looking at Lamborghinis and Ferraris when your pre-approval says you can afford a Mercedes or a BMW. Another term that often gets thrown around is equity. Equity means how much appreciation you have in your home. So if you've purchased your home for $500,000 and now it's worth $700,000, you effectively have $200,000 of equity that can help with your purchase or your upgrade of your new home. Now, we've got your pre-approval, you know what the equity is in your home. Next step is writing an offer. This is referred to as an offer to purchase. This is a formal document that outlines the terms and conditions of your purchase. This will include specific terms and conditions that will need to be met before you close or purchase the home. These conditions are typically for the benefit of you as a buyer to ensure that all your ducks are in a row prior to that purchase. Some conditions will include financing. Just because you have a pre-approval doesn't mean that the bank is going to approve the purchase of that home. They're going to need to know what is the house worth, how much equity is in that home, and the condition of the home. If you were unable to obtain financing, this would allow you to rescind your offer and back out with no penalty. Home inspection condition. This condition is there so you can get a certified home inspector to come in and have a look at the home and ensure that it's in tip-top shape. If significant issues were found, this would allow you to be able to back out of the offer or negotiate with the seller on a new price so you can take on the repairs yourself. Next, we have the home insurance condition. We want to make sure that we can get insurance for the property prior to removing all conditions. The main reason for this, well, of course, you want to have insurance for your home, but also the lender is not going to grant you that mortgage or give you the money unless you have insurance on the property. Other conditions that might be specific to certain areas would be maybe an oil tank scan to look for any buried oil tanks, looking at zoning or bylaw regulations or strata information if it's a condo, verifying the presence of any illegal suites, or maybe even asbestos abatement. It's important to have a knowledgeable real estate agent that understands the area and knows what conditions to put in your offer. These conditions provide critical protection for the buyer, ensuring you have the opportunity to thoroughly vet the property and your financial position prior to committing. In British Columbia, we use a term called PTT, which is known as property transfer tax. This is a tax payable to the province upon transfer of property. This amount varies and it can be a significant expense, so it's important to budget for it. PTT in British Columbia is 1% on the first $200,000 and 2% on the portion between $200,000 and $2 million and 3% on the portion above $2 million. There is, of course, additional taxes for foreign buyers and certain luxury properties. Finally, let's talk about the term closing costs. These are fees and expenses you need to pay for when finalizing a real estate transaction. Knowing what to expect with closing costs can save you any last-minute surprises and ensure everything is prepared. These costs include some of the items that we've already talked about: insurance, property transfer tax. You also have legal fees, home inspection fees, and possibly any adjustments for property taxes or utilities that the seller has already prepaid. So there you have it. We've covered pre-approval, equity, offer to purchase and conditional offers, insurance, property transfer tax or PTT, and closing costs. Understanding these terms is essential for real estate transactions. Being informed helps you make better decisions and feel confident throughout the process. I hope you found this video helpful. If you have any questions or experience with real estate terms, drop them in the comments below. And don't forget to check out my next video for real estate tips. Hit that subscribe button and ring the bell so you don't miss out.